What if the real key to compounding wealth isn't buried in a 200-page analyst report, but in the half-empty soda you just tossed? Today we're cracking open Warren Buffett's playbook, how he turned everyday products into a $165 billion fortune by buying brands, not tickers. Stick around, because by the end you'll know exactly how to spot the next Coca-Cola before Wall Street wakes up. Most investors treat the market like a roulette wheel. They stare at red and green candles, pray for momentum, and panic sell when a chart sneezes. Buffett flipped that script. He walks through a grocery store the way an art collector walks through Sotheby's, seeing price tags on Moats, not just sugar water or gadgets. The twist? You already shop like Buffett. You just haven't cashed in on it yet. The twist? You already shop like Buffett. You just haven't cashed in on it yet. Let's call it what it is. The financial industry wants you confused. Jargon equals fees. The more overwhelmed you feel, the more likely you'll hand your money to a fund charging 1.5% to diversify into 200 stocks you can't name. Meanwhile, the average holding period for a stock has collapsed from 8 years in 1960 to under 6 months today. We're not investors anymore. We're high-frequency gamblers with better Wi-Fi. Buffett's antidote? Buy a great brand, then do the hardest thing on earth. Absolutely nothing. Buffett's antidote? Buy a great brand, then do the hardest thing on earth. Absolutely nothing. Picture Omaha, 1988. Buffett strolls through a supermarket and notices something weird. Even during recessions, shoppers grab Coca-Cola. Not generic cola, not store brand fizz, Coke. That observation became a $1 billion position that's now worth over $25 billion with dividends reinvested. He didn't need a Bloomberg terminal. He needed eyeballs and common sense. The lesson: if customers reach for a product out of habit, the company has a moat that no spreadsheet can quantify. A moat is simply the reason you can't kill a brand even if you try. Coca-Cola has taste plus 130 years of nostalgia. Apple has an ecosystem that locks your photos, texts, and grandma's FaceTime calls into one walled garden. Wrigley's gum has the impulse rack by the checkout lane. Good luck dislodging that. Buffett's rule of thumb: if a rival would need 10 years and billions of dollars to replicate the vibe, you've found a moat. Buffett once swore off tech, calling it outside his circle of competence. Then 2016 happened. He noticed iPhones weren't phones. They were luxury subscriptions. People camped overnight, traded them in like leases, and bought services, apps, music, cloud storage on top. Translation: recurring revenue with zero extra marketing cost. Berkshire loaded up. A $1 billion stake ballooned past $150 billion, becoming the greatest single trade in history. The takeaway? Great brands evolve. If management keeps widening the moat, don't be afraid to break your own rules. Step 1. Open your fridge, medicine cabinet, phone. Write down the products you'd walk to a different store for if your local one stopped stocking them. Step 2. Google who owns each. You'll be shocked. Doritos, PepsiCo, Tide, Procter & Gamble. Step 3. Look at gross margin. Anything north of 50% with pricing power screams brand. If the company has raised prices faster than inflation for a decade, you're staring at a cash cow. If the company has raised prices faster than inflation for a decade, you're staring at a cash cow. Buffett loves brands, but he's not a fool. He paid 17 times earnings for Coke in 1988. Cheap for a 30% return on equity. During the dot-com bubble, he refused to buy Microsoft at 60 times sales. Lesson: even Ferrari is a lousy deal if you overpay. Wait for a broad market panic, then pounce. The 2020 crash handed Apple to anyone patient at 23 times earnings. Those who bought sleep better than those chasing the next Tesla at 200 times. Before he clicks buy, Buffett asks one question: will this still be relevant in 10 years? Crypto exchanges? Maybe. Colgate toothpaste? Absolutely. If you can't sketch a future where the product still matters, skip it. Simplicity beats prophecy every time. Quick favor: if this is already clicking, smash the like button so YouTube shows it to more confused investors. And hey, if you want to see how I apply the brand checklist to a live watch list, drop brands in the comments and I'll pin the spreadsheet. 1. Buying a fad disguised as a brand. Remember GoPro? Great product, no moat. Every phone now has 4K video. 2. Ignoring balance sheets. Brand power can't outrun drowning in debt, just ask J.C. Penney. 3. Selling too early. Buffett's Coke position dropped 50% in 1998-2000. He yawned, bought more, and quadrupled down via dividends. Volatility is the toll you pay to enter the wealth freeway. You don't need mega caps. Look at Texas-based Tortilla King Mission Foods. Private, but parent Gruma trades in Mexico at 12 times earnings and owns 70% of U.S. tortilla shelves. Or Monster Beverage Coffee Fusion Dutch Bros, expanding like Starbucks circa 2003. When regional brands scale beyond hometown loyalty, they become tomorrow's national cash registers. When regional brands scale beyond hometown loyalty, they become tomorrow's national cash registers. Buffett's secret sauce isn't compound interest, it's compound identity. People fuse brands into who they are. Harley riders tattoo the logo on their arms. iPhone users scoff at green text bubbles. People fuse brands into who they are. Harley riders tattoo the logo on their arms. iPhone users scoff at green text bubbles. Once identity latches to a product, price becomes a secondary detail. Invest in those bonds, and you're not just a shareholder, you're a silent partner in human habit. If you learned one thing today, let it be this. Stop hunting stocks. Start collecting brands. Subscribe for weekly breakdowns on the ones I'm watching, and share this video with that friend who still thinks investing is rocket science. Subscribe for weekly breakdowns on the ones I'm watching, and share this video with that friend who still thinks investing is rocket science. Open your kitchen drawer, your garage, even that cluttered glove compartment. Every product you refuse to swap for generic is whispering ticker symbols. Buffett listened, and decades later he's sipping cherry Coke while the compounding machine hums in the background. Your next great investment isn't on a screen, it's in your hand. Buy the brand, ignore the noise, and let time do the heavy lifting.